charts are moving, the candles light the way. I've done the work, I'm ready for the day. No noise in the signal, no fear in the soul. I've got the vision, I'm taking back control. The numbers tell a story, I know every line, because the preparation meets the perfect time. Successful, I am the light. I am consistent, I'm doing it right. I am calm when the tides start to rise. I am profitable, I see the prize. I am a futures day trader. This is my lane. Master of the market, I've broken the chain. I trade with clarity, the fog has rolled away. I trade with edge, I know the moves to play. I trade with control, I'm steady at the wheel. A mind of pure discipline, a heart made of steel. Every tick, every trade, according to the plan.
Order filled.
I'm exactly where I'm meant to be, yes I am. Patience
Order filled.
is my power, execution is my craft.
Order filled.
I don't chase the candle,
Order
I let the
filled.
prophet find the path. If I am successful, I am the light.
Order
I am
submit- order
consistent,
filled.
I'm doing it right. I am calm when the
submit- order filled.
tides start to
Order
rise.
submitted.
I am profitable, I see the prize. I am a futures day trader. This is my lane. Master of the market, I've broken the chain. I trade with clarity, I trade with edge,
Order filled.
I trade with control.
Order submitted.
I am profitable.
Order filled. Order submitted. Order filled. Order filled.
All right, audio test. We should be good now. Yeah. Could you guys hear the music? Was the music playing? I didn't play it directly through, so maybe you could have heard it or you didn't. Anyway, now we're ready to go. Let's fire up the Futures Fanatic live stream for the afternoon of Thursday, February 26, 2026. Before I get going, now that you can hear me, I just want to remind everybody the risk disclosure and disclaimer. You did hear the music. Cool. The presentation is going to be for educational purposes only. Opinions expressed are those of the presenter only. All trades presented should be considered hypothetical. Should not be expected to be replicated in a live trading account. I'm mostly going to be showing simulated brokerage accounts, so keep that in mind. Also, if you see any securities, and I actually did buy a whopping 10, I think 15 shares maybe in the tracking account of NVIDIA today, close to the lows. Remember that that's not a solicitation to buy or sell any security as well. Make sure you look both ways for crossing the street. Don't eat yellow snow. Okay, let's talk about what we got going on here. So first is I am in these positions here, if you care. This is a account with about 59,000 bucks in it. I'm short the M2K. I am long 10 shares of NVIDIA. I'm short the ZN. I'm short the Dow Jones, and I'm long the MNQ. As you can see, the MNQ is what really nailed it today. I've been trading around it, but daily profit is right around there. So meaning there is no profit in that. So see if we get a little bounce from the Nazi here going into the close. But for right now, we're selling off a little bit. Now also got all this stuff going on across here, which is pretty cool. In the Taurus account, I did a whopping 59 bucks, and I'm kind of done. You guys should all be way ahead of me there. So we got that going on. I'm learning the wealth charts over here. I don't love it, but there's some cool things that they've done. I'm going to set up our templates on here and try to get things going, although I don't think they offer volume bars, and I don't think they offer a volume profile unless I've missed it. If there's any wealth charts experts here on the stream, it's generally difficult to provide any kind of customer support over a live stream, but if you can tell me where I can find a volume profile on wealth charts, that would be great, because when I go over to indicators, I can't see it there. But anyway, I'm short the Nasdaq over there. Just started 5 accounts over on wealth charts because I did a whole thing on web-based platforms, and I want to make sure I'm covering most of them. Over here on TradeC, I am short the Dow Jones, just one contract there. See if we come in a little bit there, offering out the 49,706. After the fall today, it's been a real nice move up to VWAP and then a symmetrical double bottom. You had plenty of opportunities to get profits in both directions, a little bit of something for everybody. And then I'm also connected over to Top Step here where I did one little trade. I try to log in and do some trades over there. Let me close this and close this. Let me go over here. If you're not familiar with Traders Dev Group, I do have a website. You can go over to tradersdevgroup.com and find out everything you need to know about what we do there and why you might want to check it out, especially if you are struggling or not having the type of success that you would like to have and are trying out these futures prop programs. We're very laser focused on how to establish daily risk budgets, trade the right size, put yourself in the market at the right times, and eventually look to develop what we call situational fluency, so you can be a fluent trader. All right, that's about it for today. I didn't have any themes. What I'll do is come over and just watch this over on wealth charts. One thing that they do relative to the Apex rules, which is pretty cool, is they, way down here, they say if you held this thing, I don't know where the profit goal is. It's like way down here. Like if I held this for another who knows how many points, I would get to the profit goal. And then they put the liquidation value up here, and they also put the 30% level on your charts as well. So if you're not capable of controlling yourself, you have some the ability to deal with it that way, which is, I guess, kind of cool. It made me think of ways in which I could code up other logic. Is there anyone that likes using those third-party Rails kind of products? One of them is called Guardian Angel. There's some others out there where you can implement or install an additional indicator onto your platform. I like it better when it's actually included in the platform. So for instance, over here on TradeC, which I talked about on Tuesday, if you want to see where I went through these platforms a little bit, you can go back, watch the stream on Tuesday. the settings here, you can go in and set up the risk settings right here in the platform. So that's kind of cool. But maybe some of you are using some of the tools that are provided by third parties to kind of lock that in. Ultimately, everybody, you should be able to control yourself eventually. I've been talking about this for a while. I disagree with lots of other folks out there that say that it's natural and will happen that you'll just have a blow up day. I guess that's true early on in your career, but you need to get that out of there. You have to get it out of there. Is there a time in which all traders have some sort of day in which it seems like you black out? Yes, but if anything like that is happening frequently where you just stuck as a deer in the headlights, you need to really work that out of the system. Another thing that I wanted to talk about today that came up, and let me just go through, like on the Dow Jones, came up in our trade room this morning, was this. Okay, now if you're not familiar at all with our trading strategies and what we do, some of this might not make sense, but what you're looking at right now is something called the range trader. This might look a little busy. Some people want their charts to be a little cleaner than this. I get it. It's all personal preference, but let me tell you what's on this chart. It's a 30-minute candle with volume profile to the current session. So not anchored to anything. This is the 23-hour from the 6 p.m. standard open. Everything that I do, I use extended trading hours. Okay. The dotted orange line here is a 233 EMA. It's just a quick way that we define trend. Why 233? Because I told you so. Also because we back tested a bunch of indicator settings across about 50 different indicators. And we were trying to find an EMA or SMA or a blend that we like the best, that seemed to have the most relevance on certain time frames. And the 233, which is a Fibonacci number, turned out to be great. So that's anytime we're above that line, we're calling it a bull continuation pattern. If we're below it, we're calling it a bear continuation pattern. If you're on both sides, it's considered neutral. Now, what happened this morning was that we started the day outside the prior session high right here, okay? So here we're coming in. This is all overnight, little move, 7 central, 8 central, right? We're coming in, we're getting ready to trade, and we are outside the prior session high. So everything that I teach and talk about is frameworks, not hardcore rules, all right? That's not, if you want to have some hardcore rules, great, learn how to code things up, and then get in that hamster wheel of constantly retrofitting and recalibrating and back testing and figuring out which model to want to run at which time. You don't need to get into all that. You can use your brain. You can be a discretionary rules-based trader, but the rules can have flexibility to them, so we call it a framework. Now, one thing that we've started to talk about is rules that will apply to certain traders based on their skill set versus others. And that's where we refer to this concept of situational fluency. But as a general rule or framework, if the market is outside the prior session's high, it is above the prior session's high, don't short it when you're first starting. Do not short it. Don't be results oriented. You know, it popped up here and then fell. Great. If you were short anywhere in here and could hold on, of course you made a lot of money. But do not be results oriented. Just don't short outside day ups. I'm going to pause. Okay? Because we had some comments from traders again today that said they hit their DRB on the short side on the Dow. Let's not have that happen anymore. Okay? Don't short outside day ups. Outside day downs are better and can be bought. Okay? Markets have a positive skew. For the most part, we've been in an uptrend for quite a while. I would mark our uptrend all the way from the sell-off that happened about a year ago this time, a little bit in April on the original tariff tantrum, okay, which we're coming up on that anniversary. For the most part, since then, we've been in an uptrend in all the markets. Okay, so first thing, don't sell or short outside day ups. Next rule, sit on your hands for about 10 minutes, no matter what. Again, all of this applies to, some people wait for the initial balance to come in. I don't think you need to wait for the initial balance. That's a full hour of trading. First of all, a lot of people don't have an entire hour. You should have about 90 minutes if you could of the session that you're trading, if you're trading the London Open or the Asian Open. By the way, if you trade those markets, it's generally better to trade a product that's actually open during that time, as opposed to trying to retrofit an equity index that's closed at the time that you're trading it. So sit out for the first 10 minutes. Don't sit out for a lot longer than that. You need to get reps. If you're looking to put, it's not the same as just watching. That's all I can point out. It might feel like, you're a real disciplined person. You're just going to sit out the first half hour all the time. You're going to miss a lot of opportunities, and you're going to miss a lot of opportunities to manage risk and to manage trades if you don't get involved. But here's the first two things. Don't short outside day ups or wait for price to come back inside range. Number two, sit out for the first 10 minutes or so. Okay? Now, let's go through a few of the other things, and this is not in hindsight, right? So this might be a little bit difficult to see, but this is our extreme turn sell indicator, okay? And as you can see, for a couple hours here, it was indicating a sell signal, all right? I teach on this quite a bit on my TradingView channel, on my TradingView, I guess they call it page. And I used to be able to have the indicator on there. Now they run some sort of bullshit screen or something that knows that the indicator is not available as a public indicator in the community. By the way, I don't sell it. It's just available if you become a member of my group. So I don't sell anything separately. There's no hopes and dreams. There's no bots. There's no signal services. I'm never going to DM you and tell you to buy crypto from me, okay? I'm not going to sell you an indicator. I'm not going to sell you some sort of setting. I've just told you this is a 233 EMA. This is a volume profile. This is the prior session high, okay? Don't hide any of the settings. This is the only indicator that's what you might call proprietary, and it's just a mixture of ADX and RSI. And unfortunately, I can no longer broadcast on TradingView while showing this particular indicator, or they don't let it become public. So you can go back and watch all the ones I did before, where I talk about the way to use this actually as a filter to stay out of a trade until such time as the signal comes off. Okay? This might look a little confusing, but this blue bar that's being painted all the way up here has to do with the buy signal down here. Okay, so let's go through all of the filters that I was talking about. Don't sell outside day ups. Wait for 10 minutes. Okay, what do you do after that period of time? Okay, the first long that you have on the range trader is over here. It's the prior session POC. The next long that you have is down here at the T line. Okay, the developing POC is a level to consider on a break above, close above, but it's not a level to consider as price is coming back to it. The developing POC of the current session, okay? The prior session POC is one that you can trade off of. Today has been a fascinating and very cool day as we have seen the market create a series of distributed high volume nodes here, 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 and then down here, right? If we would have hung out here a little bit longer, we probably would have seen a VPOC shift down to this level. As it turns out, the market is clearly showing you sort of this battle line in the sand because we have back-to-back POCs now. It's likely that we'll close with the POC at this level right here. So what I sometimes do is come in and draw in a POC right here too. Okay, whoops, that's the wrong. This is supposed to be yellow to indicate that it's the POC. Oh, whoops, I didn't want to reset anything. All right, VPOC, here we go. Okay. All right, there we go. All right. So, if you're following the framework, you sat out this entire time, not only because it was in the first 10 minutes, but you also sat it out because all of this was outside day up and you weren't doing anything. I'll point out that that over here on the S&P, we weren't outside day up. Here's our offer zone up here. We had the spike high from the NVIDIA earnings last night at 69.88, gave us a perfect inside day to work with. And by the way, this was our bid zone drawn in here from the morning before we got down there. God darn it, it won't let me. I'm just trying to grab it and pull it over. Anyway, who cares? I say this all the time. Markets look so bullish up here. You know, we're starting to rally back up. Everyone's looking for this. And, you know, these types of events, you can never predict exactly when they're going to happen. But this prior session low is just sitting down there. If you were patient, you had 3 different areas that you could get involved in on the range trader. The first one was 69.38 half, didn't hold at all. It was butthole pucker time from the moment that happened. Okay, so how you manage risk, or this could have been just a stop out for you. The next level was T-line. You can choose to take T-line if you'd like. You can take T-line if you see that there's some relevant volume from the prior session, which there isn't. We're outside the value area on the T-line today. But you have got to back up the truck, have the faith that you can manage risk at the 68.92s. Someone put MES PSL if you took that trade, the first trade you took, MES PSL. That means the MES is the symbol and the prior session low. You can't sit this one out. Okay? So you have an order resting right there, and you take 10 or 20 points, 20 points of heat max. Okay? That's a lot for some people. Could get stopped out there. You should ideally not, but you could. Now, the other thing that we talked about today is look for these expansive candles. You can visually look at them, but a definition of an expansive candle would be anything that's at least 25% ATR. The ATR right now in the S&P is 90. So we're going to go up there 50 points. That's definitely more than 25% ATR. As this candle is forming, let's say that you did sit out. You didn't take prior session POC. You didn't get long here and you weren't stopped out. If you were, you managed risk. Don't let your first bite at the apple take all of your risk budget. This is another thing I talk about. You got a $300 day risk budget. Put the order in there at 69.38. As soon as it's down 20 points, you're out, because that's $100. You don't have to worry about anything on the chart. You literally can just learn how to trade your P&L based on your unit of risk that you have given yourself for the day trading session. By the way, we grabbed some snippets and put them on social media and everything so people can find their way to what I do and what we're talking about. For context, when you're in here, everything I'm talking about is short-term day trading, okay? I'm not referring to not having stops in and things like that for day trading. Everything's taken out of context sometimes because we just create little short attention span theater vertical snips. You got to manage risk on every single trade and for your session as a day trader. Okay? But what I say sometimes is that portfolio managers, or when you have more money and you're doing different things a little bit differently, even if you're actively trading, you don't have stops on every target. You're looking at the percentage that any position has as in terms of its influence, its portfolio risk management. Anyway, getting back to this. Now, you're stopped out there. This candle is forming, okay? I talked about this as well. Many algos are still keyed to the open of the 30-minute candle. There's 390 minutes in every cash session, right? I think it's 13 30-minute candles that you get. Watch what happens on the open around the first 3 to 5 minutes of every candle. Just stay out of this candle if you can. Put yourself in a timeout. As the candle's forming, look at the clock. You know, there's many platforms where you can even do this, right? It'll just do a countdown timer of the candle. And but you can do that in your own brain, right? So I got 17 minutes left in this candle before the new candle opens. I got nothing to do. I'll just sit and watch it. Don't worry if it reverses off a level and have all this FOMO and everything. Just know that the probabilities are in your favor, that if you get a candle that's about 25, 30% or more ATR, it's probably going to close in the very bottom percentage of where it opened. What I mean by that is, here's the open of this candle, here's the close. It wicked for just a little bit. So I've been teaching on this for a while now. You stay out of this candle, you wait for the next one to open. You can try this. On the open of the next candle, just buy it. Not, pretty much blindly. Just hit the market button and buy it. Now, this candle opened here, wicked down to there, and all of a sudden you're like, oh, this sucks, right? But as you can see, it reversed and it held up. Now what you can do is, as the candle turns green, there were some questions today about adding to profitable positions. As soon as the candle turns green, if you bought it right on the open of the candle and it comes back to even, now you're technically in a profitable position. You can buy more. And as you can see, we came all the way up to T-line, and came back, then opened, then got a little bit above it, and then they sold all the way off, and then we formed perfect symmetrical double bottoms. All of this within the entire trading for the afternoon is in the range of this particular 130-minute candle. All right. And then the final thing is that most of the time I'm looking at these volatility bands, right? Just like over here. So I have these volatility bands up, and this is where I'm entering trades. But you can see I look at both. I have both things going on at the same time, all the time. Let me see if we're making any money on our shorts. No. $8. I'm down $9 on NVIDIA. And I have 24 cents of unrealized gains. Let's look at the Russell. Suck it, Russell. Russell's all the way back up. So you want to talk about something that... Also, there's no trends in any of these markets right now. If anything, there's a short-term downtrend in things like the Nasdaq. Trade the ranges, everybody. All right, we covered a lot of ground there in terms of stay away from outside day ups. Did that apply to the MES today? No. So you can get involved in the MES. Did it apply to the Nasdaq today? No. The prior session high was way up here. So the Nasdaq and the MES suffered a lot more from the movement of NVIDIA today than the Dow, because NVIDIA is in the Dow, but the Dow is price weighted. NVIDIA is only $190 stock, $185 stock. So can't do shit with the Dow. What affects the Dow is Caterpillar and Goldman Sachs. And many people in our group have started to watch Caterpillar and Goldman Sachs. All right. Any questions that I can answer about what I went through there? Preferably, questions from people that have followed my stuff a little bit. I don't want to, if you want to learn the whole thing, grab the ebook, come into the trade room, take a 2-week free trial. Worst that can happen is you come away with a few new concepts maybe that you haven't thought of before. And we give away everything. The only thing that's not included in the trial is the members Discord and the Extreme Turn, now called Turning Points. Those are the only two things that aren't included. Okay, I was just going around the horn here. The Nasdaq's starting to pop up a little bit. All right, let's see if we had any questions there. Wow, we got quite a bit of stuff in here. All right, nice cynical one. Let me answer this. So you're an investor in multiple prop programs, a business that operates on traders failing, but then you claim to teach how to pass these prop firms. Interesting. Okay, you could follow up with that. I don't know if there's a question in there. I will tell you, as someone who's been doing this for longer than anybody else, just settle down, everybody, and listen to some wisdom here. I've been doing this a long, long time, way before this was even an option. I traded the big contract from 93 to 97. I traded the first E-mini small contracts in September of 97. This was all with live money, and have all the stories that a lot of people. I was one of the biggest SOS traders in the world, small order execution system. I have a lot of experience. I've done this a long time. So if I'm saying that you should be involved in these prop programs, I'm telling you should be involved in the prop programs if you want to learn how to manage risk and take advantage of the way they're structured. So to say something, you know what's interesting is that there's no difference in the prop model than the insurance business, which is the biggest business in the fucking world. And unfortunately, in the United States, the insurance business, especially the healthcare business, is based on what the workflow is for an insurance claim. Claim comes in, deny. That's the order flow. Claim comes in, deny. Right? And their business is made up of the fact that they bring in a whole lot of premium and they don't have to pay out all that much, except for when there's actually a valid claim, right? That is the prop model. So it's a little bit of a reverse. In the insurance business, they have actuaries that figure out what their risk exposure is to actually having to pay out for certain events. I love when there's people that go like, I think it's a scam that we need to have insurance on our homes and insurance on our properties, or I should be able to self-insure. Okay, maybe some people can, not very many people. The definition of a civil society is we have to have the rule of law and certain things in place to make sure that people can meet their obligations. So I could go on and on about this, but here's the benefits, and I will promote them all day long. I will especially promote what we do here, which is if you don't want to fail, or you want to give yourself a better chance, or you want to learn how to start with a small amount of money in the futures markets and trade these smaller products properly so that you can potentially pay your mortgage or cover whatever expenses you have from a very small account. And let me say that again, $5,000, $10,000 account. It is not unreasonable at all to grow at 10 to 25% per month. As that account gets bigger, the math doesn't work like that anymore. And this is no guarantee of future success. You might be a total moron. I have no idea how much time anyone's going to put into developing this skill. But the benefits of a very small cost, the other thing that drives me crazy about this business model built on failure or whatever is, are they a lot like a carnival game in a casino? This. But are there addictive personalities that aren't able to control themselves and will reset and spend thousands and thousands of dollars on this addiction, if you will? Yes, I get it. But I don't think anyone's calling for, I live in Las Vegas. There's a great, I don't want the casinos to close. It's a form of entertainment for me, and the vast majority of participants can control it. But where the analogy or metaphor breaks down in our favor is that there is actual edge that you can produce for yourself. I don't mean on the charts, but your behavior can produce the edge necessary to have success in what's going on here in this particular challenge, in this particular pursuit. So anyway, that got me going on a lot. I don't know if it answered the question, but yes. Yeah, so someone's saying all account blow-ups. You should never, ever blow up one of these accounts unless, of course, you kind of know what you're doing. I know people blow them up because they don't want to pay a subscription fee again. I mean, I've talked about all of that. But not only are they fantastic learning opportunities that you can profit from, but you can keep your costs ridiculously low. They have programs from like Lucid now where you pay $90 and that's all you pay. It's a one-time payment. That includes your activation fee. All you got to do is not trade like a bozo. And over the course of 2-3 months, you should be able to grow an account from 0 to 3,000, which is what's required in these programs. Everyone looks at it like, can I make 3,000 before I lose 2,500? No. Can you make 3,000 only losing 300 per day as your max loss? As I've said before, you could have a camel spit at your chart and pick the direction and instrument, and if you had that, you'd at least stay in the game a lot longer. Certainly wouldn't have to pay a reset or do anything like that. You could completely be 100% random as to what you trade and where you enter, and you could put a 2-to-1 or a 1-to-1. I don't even care. As long as you go into the platform on the back end and say, I'm done when I make $300 and I'm done when I lose $300. YouTube is not going to block a private indicator or anything. YouTube has no idea what's going on and what they're looking at, as long as there's nothing that violates there. I'm referring to somehow TradingView. If I record the idea on TradingView, they see what's on the chart. I guess they probably had problems with people recording, promoting paid indicators or something, and they have a way of figuring that out. If it didn't make sense what I was saying, that's what I meant saying. What time frame do you use for your prior day's profiles? Everything is extended trading hours. So everything is extended trading hours. I'm not all you're looking at on my VWAP bands or on if we go back, this is just the prior session profile, the 23-hour profile. This is the prior session's 23-hour profile. I don't break the profiles up into anything. There are a lot of ways to do this. And if you found something that's more helpful, great. I'm just trying to get people to learn how to look at a volume histogram and decipher a little bit of information from it. All right. Is there a mechanism to filter out trading the steep-looking bands that never get back to VWAP? Otter, I mean, you could look at it visually. A lot of the time when those bands are acting like that, they are, you're already outside day up. So you can use that filter. When the bands are super steep like that, you're often under 50% of the ATR. So you can use that filter, right? Where are the bands now on, I mean, I'll use the Russell because I'm on it. They're flat as heck. Look at it. And this is on a 5-minute bar. They're way flatter on a tick chart. All right, MES prior session low. A couple people were there. So Brad, good question. If you don't use the tick charts, yes, the 5-minute is going to be the closest to the tick charts. For those that don't know, the logic associated with standard deviations from VWAP will differ based on the time frame, the open and close of the bar that you're looking at. So what we found is the closest is about a 5-minute. So in other words, the 5-minute bar will look the closest to having your 1 and 2 standard deviations be similar to the Renkos. Okay? But I highly encourage you guys to get access to a platform where you can look at these Renkos. They're not everyone's cup of tea. I would say 80-90% of my group uses them, but and you can't do it on Tradeovate or TradingView or a lot of these others. You need like Sierra or Tickblaze or NinjaTrader, and that way you can configure the tick offset and the length of the bar, which gives you something that I find is invaluable because you get swing levels that are much easier to see that won't show up on a 13-period swing on a 5-minute bar is not going to do anything for you. In fact, swings on anything except a tick chart just look like shit and don't do anything for you. All right. Passed a lucid flex this morning with max 4 NQ and only 14 days in the month. That's fantastic. I would say that 4 MNQ should be your absolute max. That's going to get a little squirrely. So what my ebook talks about is sticking with the MYM when you're first learning, or if you're having trouble getting to what we call a TDG, the advanced belts, right? Green belt, orange belt, black belt, get up to there. I don't know if orange belt is an advanced green belt. I don't know. I did Krav Maga, and we didn't really have belts back when I did it. There's a button on TradingView videos to copy or use your chart. That is how I got some profiles set up when starting. Great. Okay, how do you set up your VWAP on TradingView, for example? Which standard deviations to keep? Okay, this is what I have over here. I think most of this is on the chart. So I've used VWAP Standard Bands V2 Mod, which is it's in the community section. One of the things I'm working with some of these newer platforms on is to figure out if they will ever give us access to be able to import some of the community indicators into their sort of closed systems. You know, you've never been able to do that on TopStepX or any of these other platforms. So if you're using your own instance of TradingView, it's VWAP Standard Bands V2. And then the settings are 128. I left 128 as opposed to 1 because that's what the developer did. And I only look at 2 standard deviations. His third standard deviation is 2.51. I don't know why. So on Ninja, I have 1 and 2. On this, I have 1.28 and 1.28. So dance with the girl that you brought to the dance, or ride the horse that brought you to the stable or whatever. So There you go. That's the settings, and you can set this up for free. You don't need anything from me. You can get Rankos on TradingView with the plus or higher plan. You can't get them to have offsets and use tick charts. You can't. There's no tick data on TradingView, so you won't get them to look the same. Okay, cool. Oh, we got guys asking for the brokerage statements again. Yes, let's go with brokerage statements. I'll tell you one thing that I will do, and you can come on the stream every day. You can watch the balance of this account over here. I know it's a little piker thing. It's 58,000, and I did have to put 10,000 back in it that I took out, but there will be no more deposits or withdrawals from it, so you can watch it for as long as you want. So it's timestamp it February 26, 2026, 58,920. Well, the balance is not actually updating because sometimes I think the balance is a little over 59,000. Let's call it 59,000. Come on in and watch. You can watch it in real time. Statements are the dumbest thing ever. Let me tell you why statements are the dumbest thing ever. I mean, you're going to get me going, okay? I'm a fortunate guy. I have accounts that have lots of money in it, okay? But how many accounts do I have? Let's see. Probably 70, and that's not an exaggeration. So you want to see one that's doing well? Sure, here's one that's doing well. You want to see one that's not doing well? Plus, the final thing about this whole statements thing is I'm not selling you signals. I'm not selling you anything except for come into my trade room, and if you find value and it helps you out, then you can pay to stay. That's it. I don't have a course. Okay? So all you cynical fuckers out there, including these chat pros, and I'm not getting on you, the guy that made this comment. Whatever, it might be your first time ever watching the stream, and I know there's a lot of bullshit and garbage out there, but I want to set the record straight on this. There's a lot of these quant bros out there now that are also talking about, well, unless you can back test the whole strategy and this, that, and the other, this is a scam too. That's nonsense as well. I'm not suggesting that you buy this and code it all up and that it has any kind of edge. The edge is you. The edge is you. It's the operator, the executor. That's the edge. And yet they're teaching a whole bunch. Could you imagine a worse job right now than to try to be one of these quant bros, these algo quant bros? I don't care who you work for, Citadel, Jump, Renaissance. You're just out there mentally masturbating and banging orders into each other, creating almost zero alpha. Establish a daily risk budget and a unit of risk, and then you can actually measure your performance. And in terms of value, come on in, figure out whether you find that this is useful for you or not. It's free. I don't have a course. I have a course. It's free. Everything's free except spending time with me, which should be a privilege. All right. Anyway, back to some social proof. Oh, by the way, and I don't know, this one has $7,324 in it. Started the month at $5,000. On Monday, this account will show $5,000 in it again. So you can watch what happens here. Okay? How about this? Let's do this. You guys got me going now. I love it. Top left. There's a account with started the day balance today at about 9,500. That started the month at 7,500, so it's up, I don't know, 2,500 bucks. Come Monday, I'll take it back down to 7,500 or maybe to 10. I am going out of my way to show you that this works, what I'm talking about here. Before the Trump administration, I was very concerned that all these prop programs might go away. And I wasn't concerned because I was going to lose affiliate commissions. I was concerned because I was teaching around managing a very small amount of money, which only really works to invest your time in doing that if you can then use leverage and copiers across firms or across accounts. Without that, I'm not here suggesting that that you should spend a whole lot of time with a $2,500 account for the rest of your life. You can learn a lot from growing small accounts, but I mean, it's not going to really supplement or complement your income unless you can eventually stitch that together with more leverage and more accounts. Okay, we just had our market on close orders and Bitcoin's going down a little bit. By the way, nice move for the treasuries up today, huh? So rates in a little bit, ZN at 113.145. Do I dare sell some calls in the ZN? Okay, so again, instead of statements, come on in and watch probably the only person that actually trades the programs that I'm recommending with live money as well, with a size of account that's approachable. Okay. All right, so let me go. Let's see if we have any other questions here. I am not short the MNQ. I'm long MNQ. I'm short M2K. I'm long MNQ. I came on and here's my positions. So I'm short gold now apparently as well. I don't know if I want to be. I guess I had an order up here. Gold closed pretty nicely. I don't think I want to have this. I'm just going to close this. I'm glad I looked at my positions. All right, so just close gold. 52.17 spot 1 to 52.12 spot 9. Okay. By the way, where was this order? Just resting on the lines. I'm not doing anything I don't teach you. Just put the order on the line. Right? Just put the order on the line. There it is. Okay. So I'm short the M2K. I'm long 10 shares of NVIDIA. I'm short the ZN. I'm short the Dow Jones, and I'm long the MNQ. Okay. In some instances, in some prop accounts, these types of positions might get you in trouble, but that's why this is real money. And none of these positions are to hedge anything else. They're simply because the MNQ is strong today, and it's in the offer zone where I'm going to short and offer off liquidity. The Dow Jones is in the middle of its range for today where I'm going to short and look for a retracement for the close. The Nasdaq has been weak all day, and generally my experience is we don't see these kind of days back to back, so could have a snapback day tomorrow. If nothing else, I have levels to be long the Nasdaq here, right here. Right here. So looking to buy another one just shy of, so you can see how this yellow line here, this is the visible range profile, which simply means it's a volume histogram based on the amount of data that I'm bringing back. Just a big round number of 25,000. Then the minus twos are coming in at 24,912, and these are right here. All right. Okay, we got about 5 more minutes left. It didn't seem like there was any particular questions about where I was starting the broadcast, where I was spending some time on that range trader and just talking about all of the ways to filter out the outside day ups and don't short, sit out for the first 10 minutes, look for expansive candles and stay out of those too. Look to enter markets at the open of the next 30-minute candle. Not every 30-minute candle. If it's just a dull 10, 15-point candle in the S&P, you can trade whatever levels you have. And then also the opportunity to add and trade with the direction of the 30-minute candle. There's a lot of trading strategies out there and traders that I know have multiple time frames all the time, and they want to be in when the 15 agrees with the 30 and the 30 agrees with the 4-hour and all this stuff. If you can keep all that straight, great. If it helps, great. All right. There you go. So someone's saying I always wait for the first 15 or 30 minutes. This morning we had about 30% range when we started. And what does that mean? I'll explain to other members of our group. What you want to do is you want to get access to the 7-day ATR using the 23 by 5 or 24 by 7 or whatever, the full extended trading hours. Okay? So the entire trading hours. And we're going to take the 6 p.m. standard Eastern Standard Open, and we're going to look all the way to about 7:30 or 8:30 Eastern Standard Time. How much range was put in by what Kramer calls the pajama traders, right? How much range was put in over that period of time? And if it's 30 points and the expected range for the day is 90 points, which it is in the S&P, then you have 30% ATR. That's not enough to get started. So we're adding another filter that members of my group will know about. This is what's called developing situational fluency. It's a little bit of a checklist, but it's not one of those checklists where this has to align and that has to align and all the stars have to align, and then you look down at this and I see so many charts where there's all this shit at the bottom of it too. Like it's actually helping anybody. You know, cumulative delta down here and or some other bullshit at the bottom of the chart. Trade the hard right edge, everybody. And the hard right edge, if you have an indicator down at the bottom, I don't care if it's an oscillator or anything else, that hard right edge is going to mirror price. It's not going to do anything for you. Again, if it helps and if you like it there, no problem. But all you got to do is put the orders on the line and manage risk. And put the orders on the line after you go through this little mental checklist. So someone was saying wait for the first 15, 30 minutes, that's fine. Or make sure there's at least 50% ATR, or make sure it's not an outside day up. All these things keep you out of what I hear, which is, I get killed on trend days, and no. No, you don't. You don't know what the fuck you're doing. Am I sitting here telling you this works all the time? Of course not. Do I have losing days? Of course I do. In fact, I have over 65, 70 funded accounts now. It might be even higher than that. I have 3 to 4 or 5 at every single firm that exists that I paid for and passed. None of them are direct. Okay? And I take about 50 of those and I track what's happening with them, again, using copiers and small accounts, and I put that into TradingView. TraderView, my journaling software. And that's just from the accounts that I can access. Like I'm not going to take the time to import whatever the hell, and these actually aren't funded yet, so it wouldn't matter. These Lucid accounts here, I'm not going to import these because they're on this other platform over here. I could get an export of them. But anyway, my point was, yes, of course, I lose. Will it work out all the time? Of course not. Are you going to hit your DRB? Of course you are. But your whole idea of progress is not to become consistently profitable. Your goal is to suck less, a little less each day. Entering at better spots, identifying in real time what's happening on the charts. That's our song that we have, just suck less. How long did it take you to become consistently profitable? I'm not consistently profitable. I just don't lose a lot of money when I lose, and I make more money on days that I win. And I'm here broadcasting and doing this to show you how to do it. There is my favorite thing. We just had a Trader Talk Tuesday again on Tuesday with a 24-year-old professional trader named Riley. Everyone wants to go, how did you do it? How did you do it? And he's a member of the group, right? And he's just, you know what they always say? I work within the framework of what you're seeing on the screen. Okay, little rally for the Nasdaq here into the close. I'm just going to hold it. So I'll go into tomorrow with like these positions on, and the only thing I'm going to close is one of these Russell. I don't need to be short 2 Russell, so let me just buy one of these back. Okay. All right, let me see if I missed any other questions today. I think this was actually. Sometimes when I'm talking in real time, I feel like I'm dropping some knowledge. Other times I feel like I'm just screaming at you guys. All right, so there's a question about why I don't go live. I have somewhat of a unique opportunity in the fact that I know a lot of these firms and they approach me about promoting them and all these other things. And here's the truth be told. You're not going to, this thing. Almost all of them, I don't really even take payouts out that often. I keep them all around the same kind of price. I'm just tracking all this for fun and for entertainment purposes. My situation is a little bit different. That being said, often it's around $10,000 to $25,000 a month. I know that sounds like a lot, but it could be a lot more if I made this my professional sim farming business. But at some point, many of these firms, if you did that, yes, they're now. I am not suggesting, please, please, please do not optimize to never be taken live and blow up your account on purpose or slow down or do all these manipulative things. Look, if you have a firm like Take Profit is a perfect example. They're outstanding. You do well for just a little while. They'll take all of your pros, put them Pro Plus, you'll be live. And there's plenty of examples out there of people with just 4 or 5 accounts that Take Profit that are earning super good livings in live markets. So that's what you should aspire to. When I talk about having these 50 funded accounts that are in Sim, my situation is a little bit different. I'm not pushing them. I'm not violating any of the kind of rules. I'm not purposely trying to stay in that environment, okay? So my situation is a little bit different. And I don't think there's anybody out there that also needs accounts at 25 or 30 different firms. You don't need that. Pick 1 or 2 that you really like. That's absolutely enough. And if you happen, now, all this being said, there are some firms out there still that, to the point earlier of, this is very interesting. You claim that you're teaching people how to do this and you're promoting a business that profits from failing traders. Well, my response to that is that I'm aware of, and I'm not going to name them by name, there are 3 or 4 of these firms out there, and let's be honest, Apex is still one of them. The amount of people that Apex puts live is minuscule. It's almost non-existent. So that carnival game is allowed to continue, and obviously they're one of the OGs and they're a very profitable firm, but there's 4 or 5 or 6 others that you can just stay right below the radar. And I'm not talking about like $500 a payout. I'm talking about $5,000, $10,000 per payout in Sim. We have traders that are going on years of that and have never been taken live, had not had their accounts canceled, nothing. I wouldn't even say they're flying below the radar. They're just acting as responsible traders that I'm sure some of these firms have copy infrastructure in place, and they're absolutely fine with that relationship. The other thing that's cool is that there is a spectrum now across there's an entire spectrum, right? I did a review yesterday of Prop Shop Trader. I don't think their model is very compelling for a lot of futures traders who have figured this out and have other ways that they can have financial benefits sooner. But if you're struggling and you can't stick to anything and you want something that's a little bit different and you like this concept of making just a small amount of money every single day as best you can within a defined risk budget, and you can take your time and then you can delay that gratification and get a much larger bonus, if you will, and then you're taken to a live account. They have firms like Perdea Capital that puts you live very quickly. They have the futures desk that puts you live very quickly. Again, none of it makes it any different than this up here. Figure out how to make $1,000 on a $9,000 account, and you will have a skill set that you can overlay across any of this. And as I could go on forever. You figure out how to do that and come to me, and you prove to me, talk about brokerage statements. You don't even have to have a brokerage statement. I'll allow you to connect your interactive brokers to my platform. I'm not going to steal your trades. I sign all this stuff to say I'm not stealing your trades. I'm just watching your track record. You show me you can do that, I'll get you access to infinite amounts of capital through subscriptions and things like that. Here's the thing. 1 in a million people can do what I'm showing on the screen. And I really mean that consistently without big drawdowns and they fall off the wagon. They can't take $5,000 or $10,000 and just grow it every single month with small drawdowns. I don't know why. For the life of me, that's what I'm looking for. Figure out how to do that And then I can show you how you can sell your signals for $99 a month, $150 a month in a fully compliant way. You can have 100 people paying you $150 a month for you to push the button on a single micro. And I can back that up because we have people on the platform doing it. Trading a $10,000, $15,000 live account, trading a few micros, and every time they push the button, that is copied across 100 or 200 investors in their own self-directed accounts at Interactive Brokers. And that investor pays a small subscription fee each month. Okay. Yes, then many of these firms have multiple live accounts, between 1 and 3. I think the max is about 5. This is all a very new thing because brokers never wanted to have people with 3 sub-accounts and all this stuff. And by the way, it's also caused these problems of where you lose your account instantly if for some reason you had a mix-up where you were long and short the same thing in 2 different accounts. That, by the way, that is against regulations. But that's just this weird thing because, you know, I never had multiple sub accounts anywhere in this manner. I have a lot of different separate accounts at Interactive Brokers, but they're not multiple sub accounts. All right, I think that's it for it. Let's see. Are you bullish long term from yesterday evening the highs? I don't speak about. I'm not bullish long term on anything, or I have no opinions on anything. I'm wrong all the time. If I knew it was going to happen, it wouldn't be any fun, right? Okay. Tons of the market is benefiting off failed traders. Yeah, I mean, we've all seen that before. So hold on a second here. All right, there we go.
Order filled.
Tons of the market. I think that's it for today. Does the monthly look like? That's not my bag, dude. So I don't comment on any of that. I don't care. Does it look like it's rolling over or this kind of stuff? It doesn't inform what I'm here to teach and trade on, which is how to manage risk and adapt to the current situation on the current chart. We're not looking left too much. I'm not going to look at the weekly or the monthly or try to predict whatever. The only thing I've told everybody is app loving is going to 250. I'll hold my short there. But that's structural. That has nothing. That has to do with the business that they're in. Somebody could create the entire AppLovin business. You can't create Salesforce, using Claude code in 2 weeks, but you can definitely recreate AppLovin without a doubt. Anyway, those are the things I look at. Okay, everybody. Stay green, trade like you mean it. It really does help if you hit the like button. I'd appreciate that if you ended up liking it. And if you want to check in with the stream every day for the next couple months, we'll see how these accounts on the screen do for you. That's as much social proof as I can possibly provide. I'm not doing any wizardry here. I can move this out of the way too. This will be the last thing that I'll, you can copy down the account number if you want. There you go. Interactive Brokers, live account. 59 grand. I hope you agree, maybe you don't, that if you're going to assess where you're going to spend your time and effort and listen to anybody, that's a lot more useful than a brokerage statement, I think. And it's also an amount that I think is approachable for most people. It's not $500,000 and it's not $5,000. I have plenty that are smaller for you. Anyway, appreciate all your time. Hit the like button. Check out all the resources that are in the description down below. And for those that were in the Taurus competition, I think we'll be sending out the final results over this weekend once we go back and watch through all of the... Let me just close these positions here. I don't know what the rules are on how long you can be here. I think it's also good to hit the flatten all button. Hitting flatten all. The one thing you got to have going on if you are multi-propping, lots of different platforms, lots of different things, which is total madness. You probably shouldn't have this, is just have a standard operating procedure, right? Where you come in and you just go to each chart, Make sure you got no orders on. You know, you want to have a standard operating procedure, or you're going to leave something out there and you're going to be all pissed. So for instance, this is wealth charts. This is new to me. I don't even know what position I'm in. I am short. All right. Is there a flatten all over here? There's a flatten right there. Okay. Perfect. I got 5 accounts here. These are all flat, I think. So we just look, I'll look through those in just a second. Trade C, we just did that here. This, I think, automatically closes the orders. That's one nice feature of Top Step. Okay. And one last time, if you want to track around with this on Tuesday, we'll see what positions I'm in on Tuesday. But I'm short the MNQ, I'm long NVIDIA, I'm short the ZN, I'm short the Dow Jones, and I'm long the MNQ. All right, everybody. Thanks a lot. Stay green, trade like you mean it. Have a good one. We'll see you at the next one. Be good. Bye-bye.